morning, everybody. It's RT here in the lab on Friday, and we've got a little bit possible signs of a low time frame reversal here on Bitcoin. So we're going to talk a little bit about the dip and the greater trend and a few ideas of how you can spot trend reversals on the high time frames. Was that the top? Where is the bottom? All those kinds of things. So if you haven't already, you can hit the like and the sub button. Follow us on here. There's going to be a lot of these market update videos, live streams coming your way. I'll be live today at 3 p.m. on Hxro Labs Live. Be sure to come check it out. You can follow me on Twitter at randomtask555 and follow our account at Real Hero Labs on Twitter. Now, let's get down to business here on the charts. The 15-minute showing signs of bullish divergence as price came in and swept the local lows overnight, triggering my alerts basically left and right. You can see here, sweeping the highs. Oh my God, it's a breakout. Not really, rejected. Back down here, pretty much a straight shot down to the range lows to sweep these as well. Bullish divergence coming in, and as such, we've seen a little bounce here. Now, if we zoom out to the daily chart, you can see we came in, the top was really marked by this FIB extension beautifully. Something we've been keeping a close eye on. The idea up here, chaos PRZs coming in on a lot of the DeFi perps, things like that, altcoin index, ETH, USD, BTC, USD, a lot of high time frame reasons where that might have been a pivot just based on pure technicals. So now we're down here in this pump chaser zone, a place where generally speaking, during this strong uptrend, I'm thinking, well, if we get back down into here, that's where I'd like to be a buyer. Having those plans in place, having those levels spotted out makes weeks like this not so scary, even though things like my Solana bag, I am seeing a 22% drawdown just since yesterday. And if I look basically, like if I look just at my portfolio tracker and I look at a dollar value and I think, oh, I could have sold up there, I shouldn't have bought here, you know, like it's very emotional. You can look at that stuff if you don't have a plan, if you're not looking at charts, if you don't, you know. So understanding TA, having a better feel for what the market does, ebb and flow, why we're here, learning about this stuff, me helping you guys out, is to just give us a bit more of a plan. Now, if you messed something up this week, if you were buying into the highs and now you're feeling wrecked, I would highly recommend, strongly recommend, I should say, that you just take that emotion and bottle it up into a pen or a keyboard and start journaling something. Create a Google Doc and just write down what you're experiencing, what you're feeling, because this kind of stuff's going to happen all the time. If you want to play in these markets, you got to understand it's sharp up, sharp down, consolidate, trends. You know, there's so much to learn, and you just really want to set yourself apart from the greater crowd who are mostly just buying and selling randomly. And at the end of the day, they're probably not really being very optimal in the market, getting chopped up. So if you want to really stand above and beyond, it doesn't take much. Just a little bit of journaling, taking things a little more seriously. This market can be very forgiving, like 2017 when I didn't really know what I was doing and I was just kind of like, I'll just buy every dip and hold through. And at the end of the day, you know, at the end of the year, obviously we all look back and we were very lucky. It was so easy, right? So this market could be very forgiving this year for those of us who are still just learning and getting to know this stuff. I myself learning new things every day. You know, anyone who stops learning and just says, I know everything, they're probably setting themselves up for disaster. So all that to say, try not to overreact to these market moves. You know, Bitcoin dominance is really just consolidating. It's not really moving anywhere. Certain altcoins popping off. This Wyckoff throwback level we just came into, so I would expect some consolidation between these levels. Not a whole lot out of the ordinary. So let's look at some high time frame stuff to give us a little more confidence and understanding around the weekly chart. There's a few things you're going to see on this chart. First of all, this white line is a 20 moving average. That's a 20 week moving average. So it's a weekly chart, and this white line is an average of the previous 20 candles. So you can see here, these candles moved up really fast. If you take 20 of them and bag them together, this white line represents the average of those, and that's why it's kind of following price, and price will move in and out of it. So when you have a bear market, when you have consolidation, it's going to be on each side of it. And one thing I want to show you here, the other thing here, is this Fibonacci tool, okay? What you end up with is basically this cluster of colored bars, which I have colored this way. You know, the 618 to the 786 is technically the reload zone. I've added the 886 purple for a little bit of an extended move, and I've added the 702, which is in the middle of these two levels, and I call that the sweet spot. Okay, and this is areas where I look for price to reverse. So in the top for 2013, you had a huge dump. Now this is weeks long. Remember, this is 3 weeks. It's almost a month of just death. And right when everyone loses their lunch, price squeezes back up. This is where you have the real debate. Is this bull market over? Is it not? And as it turns out, that was the local top. And then it was just a couple of years of ugliness. And when did it reverse? Well, we had a huge dump down. Was that the bottom? I don't know. Is this the bull market? We don't know. But you can bet that this kind of thing is going to happen at major market pivots, where here you had the move up, so you measure back down. Again, giving us an interesting area to look for the long side if we want to call for a bullish reversal. Well, that was the top of 2013. This was the bottom in 2015. Let's go ahead to 2017. Now, through the bull market in 2017, this 20-week moving average, this magic line, through all of the chaos and death that happened a few times throughout the year, right here, the Bcash fork, very scary. The Bitcoin blockchain could die. It was ugly. At the end of the day, this 20-week moving average created a really nice launch pad for continuation of the market. Anyone who lost their lunch down here when the red weekly was down below, probably regretting it. So even though there's a bullish throwback, like there were so many things looking back, very easy to see. For those of you more passive investors just looking at the market, this 20-week moving average is a really nice area to dollar cost average through a bull market. And if you're saying, wow, what if the bull market's over? Again, looking for these kinds of reversals. It happened in 2017. Again, pullback, the argument, the real debate, the real battle comes up in this short reload zone. And once you lose that, you can say, okay, you know, probability is pretty high that we're going to have to cool off a little longer here. And as it turns out, we had a bear market. Down here at the bottom, did we have a reversal? I don't know, but that reload zone did mark what ended up being the end of the bear market. Didn't confirm until here, just like this didn't confirm until there. But you can see that these market sort of high time frame pivots on the weekly, they don't come in one candle. They don't come in 2 candles or 3 candles. They come in over a series of weeks. So let's fast forward to today. Do we have that? Do we even have what could be considered the beginning of that? Not really. So on a high time frame on the weekly, which is always a good place to zoom out to if you're not sure what the hell's going on, nothing's really changed. It's just been green, 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 red. 1 week, not a big deal. But you look at your portfolio tracker, you're not really sure, you're not looking at charts. It's very easy to see this double digit and say like, oh my God, the world is over, the sky is falling. If this is the high time frame top and that was it, and we're going into a bear market or we're going into a really ridiculous gross thing, global equities crashing, all this crap, there's a very good chance that we're going to get a chance to exit when the bulls come in and say, actually, I don't know, maybe the market's not dead yet. So waiting for that retest of highs before there's any kind of, before we can put a fork in it. And I think, that could come here. Again, this is if you want to be a bear. On a week like this, where it's just the first impulse down, the first pullback, not really a great time generally to be just calling it quits and selling into that 20%. I'm not here to give you financial advice. I'm simply sharing my analysis and what I do here in the market. So right now, last weekend, you guys know on Twitter, you can follow me at randomtask555. I was doing a little bit of selling up here, taking some cash into my account, and I did come out and buy fairly aggressively here, adding 5% back in, 5% back in, and that's unfortunate. I think I bought a little bit on this dip. I think bought a little bit on this dip, but I'm still in a 45% cash position right now. And when things are crazy and there's a nice new trend and everyone's buying and things are mooning, I will look for pump chaser zones. I will look for retests. I will get some of that cash back into the market. For now, very comfortable sitting there. I am watching some 20% drawdowns on some of my alts today. Not too worried about it. The greater trend is up, and taking little profits here at Chaos PRZs, buying little bits back in pump chaser zones, blah, 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 same old story. If you're really interested in where to average into a longer term Bitcoin position, watch for this 20-week moving average. Through the bull markets, it's magical, and we are still quite a ways from it. So that means we could be consolidating here for a bit, maybe one last dump, whatever it's going to end up looking like. This will make contact with price someday. It's just an inevitability because it is an average of price itself. They will meet. They have to. It is guaranteed. It's one of the few things we can say is for sure. The question is when they meet. Is that the end of the market and we're going down? I don't know. That's something we'll have to follow and cross that bridge when we get to it. But generally speaking, it's a perfect place to start thinking about taking a longer position with some of that cash. So I'll probably be deploying my cash much more aggressively if we ever come along and tag that. For now, we're in a pump chaser zone on the daily, and I would not be shocked at all to see some kind of move up into what will generally be a short reload zone. And because after a trend like this, you get a smackdown, and then usually it's kicking the market into consolidation. Big trend up, smackdown. My guess is, if I had to be a gambling man, placing bets, we get into some kind of like consolidation, fib pong, and it's just fib, 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 fib. Okay, that's probably the bullish case in this case, where we're just going to be hanging out in this range. Obviously, equity's looking a little heavy this week. Lots of doomsday talk, and you know, of course, there's more room on the table for something like a little reload zone from up in this area, where we get back down into these areas. So you just got to ask yourself, if you're already freaking out here and you're thinking, oh my God, I made all kinds of mistakes. I was buying through this. Now I need to sell because I can't handle this. You know, just maybe take the foot off the gas a little bit when it comes to making decisions. You don't have to go all in, all out. That is how you get emotional through this kind of thing and get really chopped up. So by the time this is done, you've lost all flavor for the market. And just when you feel comfortable having sold everything and you're like, good, I'm out, you know, often is the case where you just look back and you're like, oh, fuck. And then you're back in at a loss. So, you know, careful moving around based on emotions. Try to come with a plan. And if you're not sure about TA and this is all new to you and you want to ask some questions, you can catch me live on Hxro Labs Live later today at 3 p.m. Eastern. And we'll just go over all this. We'll hang out. It'll be casual. You can ask as many questions as you can think of. There are no dumb questions, only dumb answers. So I'll do my best to walk us through whatever charts and analysis we want to look at today. Other than that, 20-week moving average, nice high time frame, and you know, looking at these pivots in reload zones as market highs and market lows. I mean, we even got it in 2019. Even if I could pull this up, that'd be great, right? Big down, right back up, tag, got a little front run here, but generally speaking, at the higher time frame pivots, you can find these kinds of reversals. And right now, we just have one weekly candle. So what I tell myself when I wake up in the morning is relax, enjoy the market, enjoy the ride, check the news, stay up to date. We'll be back on a little later today. Until next time, guys, have a great day and always play from a position of strength. Take care.